is session 2.
Okay, can everybody see my screen?
Yes.
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 Okay, it says finances and planning, because I have like 3 screens that are saying completely something different. So I'm like, just making sure. Okay. Well, good day, everybody. Thanks for joining us again for the second session of the third boot camp of the year. And today we're going to focus on the profit and loss statement. So let's just get into it. We went over the housekeeping. Once again, thank you to our hosts and our sponsors. There's my contact information. Feel free to email me with any questions. So Tuesday we covered, how money flows in your business. So that was just like a nice little intro about money in your business. And then tonight we're going to focus more on profit and loss. I think out of the 3 financial statements, it's the one you really need to have a good grasp on it. So I've centered just on this one. It's not a lot of extra information on it tonight. And I have a couple of examples to show so we can walk through it so you get a really good understanding of it. I added this to the deck for last session as additional information, but I just want to make sure I go over it with you guys here. So before we get started, I just want to make sure you are aware of some of the free resources that are available out in the universe. If you're a textbook type of person that needs to download, have a textbook with you or regarding these topics, there is a platform called OpenStax, has free business textbooks, including ones on accounting and entrepreneurship. These books have been vetted. Many of them are adopted by many colleges and universities across the country. So they're high quality resources. Also, there's a local nonprofit called Sailor Academy, as well as free courses and materials in which you can get college credit if you wish to complete the course. But if you don't want to do the entire course, you can just download the material. So they also have some high quality information, all vetted by professors in the field. And in the U.S. Small Business Administration, on their website, called a business guide. And the guide has a section on business financials, which is very good. It's nice and basic. It's a quick, easy read. And then locally, the Washington, D.C. Economic Partnership provides a guide called Doing Business Guide. And it has some nice, just very practical advice regarding your finances. So I encourage you to download these. Again, these are all free resources you should access. And then I just put again some additional information that might be helpful to you, since we are going to talk about the profit and loss statement tonight. And it's a one statement along with the balance sheet that most accounting software programs will generate automatically for you. So I just thought I'll provide you a list of some very common small business accounting software programs that you might want to check out if you're at the stage of your business to use a accounting software. And these are the most common. Wave, Intuit, QuickBooks is probably the biggest well-known one. FreshBooks and Xero and Zoho Books and NetSuite, all web-based. All each have a different style and a slightly different value proposition in terms of the add-ons they offer. True transparency, I use Wave, and right now it is completely free. But like I told you before, you're always paying something, so they do have access to your information when you use their programming, but it is free. They have additional fees for overseeing transactions and stuff, so that's how they make their money. So, but I like it, but this is not an endorsement if to sway you in any which way. So please check them out. And HubSpot wrote a really nice article of the 20 top accounting software tools that they found. And these are all on that list. But if you want to get the article, you have a more robust list. Every year that I do look up new software every year. And so there's a growing list of additional ones in there that I haven't yet used. So you might find something that's more fitting to your industry or your type of business, right? Also, for the financial statements, the template that we provided yesterday was from Microsoft. That was free. And so I wanted to highlight that Microsoft offers a template for all of these statements that we're going to go over. as well as other companies such as Smartsheet. So don't feel like you have to spend a lot of money to get the resources you need. There are a lot of available resources that are easily accessible to you. Okay, so let's do a little review and reflection, and you can reflect on anything that's happened regarding business or specifically what we talked about, or if you attended a previous boot camp and something has come to mind, please free to share. So last session, we started out talking about why we started our business, because that is highly influential on how we could possibly be making financial decisions. I just want to take a moment. Does anybody have any aha moments? When they read the article, did any other thoughts come to mind? And the Congress Heights group can add in as well and add your point of view. So just let's take a moment. Any thoughts on the 4 reasons? Did your reasons change or be reaffirmed? Any thoughts? Miss Dominique and Black Bella and Baldwin and Monica? No thoughts?
Missed the call on Monday. I was working, so but
No
nothing to
problem.
add yet.
Okay, okay, all right. And Miss Dominique, yeah.
I'm still going to say the passionate, but also the freedom. I had an aha moment on the freedom one too, so I have to
Okay.
add that one on.
Okay, okay. What was the aha on the freedom? That's unusual.
I mean, and the freedom that you want, that freedom to be able to move about, to control your schedule. So yeah, it's like almost like my number one reason, to be honest.
Okay, okay. Well, it's being honest with yourself. That's this is what it's all about. Okay. Remember, it's no wrong answer. Okay, good. Well, I'm still in legacy. I've read the article numerous times now. I'm still at a legacy. I'm not passionate, nor am I a freedom seeker, but that probably be my secondary if I did had to choose a second one. But I've yet to encounter the freedom the way I would like. But so I'm a legacy. Okay. So last time we were here, we reviewed some challenges that might come across. So I just wanted to highlight them here. So, you should just get in the habit of skimming through these items as you go throughout your journey of starting a business or refining your business or narrowing on what you want to do, so that you can properly, be attuned to how you're feeling about it, because any number of these issues can be a challenge and we just got to be prepared for it. And also, I start off every session with this, and so I just want to run through our definition of a business. So it's an operation that provides a valuable offering to a customer or a group of customers in exchange for a payment. And the key part of that the operation is a legal entity with a structure, systems, processes, and the valuable offering is not just the products and services, but it's the combination of the product and services with a customer experience that the customer feels valuable because it serves a need or want that they may have. Also, always be mindful that you might have not just one set of customers, but a group of customers. So it's really important to do the market research to identify those groups so you can expand the target market for your business. And as always, you got to collect payments. So that's really what this section is about, is the money of the business. Now, you might not be in it for the money, but the reality is for the business to stay alive, it has to become profitable. And in addition to that, just basic definition of a business, we have to always be mindful of the business has both an internal environment and an external environment, and there's constant forces that are pushing against that business. So as the business owner, who is an entrepreneur, you're the lead in managing the business, so you have to be flexible enough and be aware of these external forces that might have you changing strategy or direction at times. There are common business systems, and so there's numerous. So this was covered in our first boot camp. And so the financials is one of the systems we're talking about for this particular session. But just know the financial system overlaps with all of the others in some way, shape, or form. And we're gonna talk about that on session 4 when we wrap up and show you how to use your financial statements for business planning. All right, so since we have to talk about the profit and loss statement this week, we gotta make sure we keep in our minds what is a profitable business. So it takes money to make money, and that is a true statement. And so that we have to put in money to produce the product and service in that customer experience. We have to put in money to attract the customer or customer groups. And then we have to put in money to develop the systems that will collect payment. And in doing so, the money we put in has to be less than the money that comes in from sales, ultimately from sales, okay? And so the profit and loss statement that we're going to go over today is really focused on this kind of cycle. And if you understand the profit and loss statement, you'll understand how the money is moving, making moves in your business. Okay. We also covered last time financial records, so you just highlight that there. So I would just advise everybody to have a little filing cabinet. And if you like hard copy stuff, start keeping folders and stuff as well as electronic using Google Drive, OneDrive, or Box or something like that. And of course, your personal finances is going to be the initial backing for the business credit and financial profile. So be mindful of the credit reports and scores. This is the cash flow statement template that we went over last time. So highlights. Cash coming in is recorded at the top, and then the remaining part of the document is recording all the cash that's paid out. It's a very simple setup. Okay. This was our example last time, and this was just a highlight. There are variations to the template, and so in this particular template, the style was using the parentheses to indicate a negative, which is meaning that money went out instead of coming in. Just a variation in the style. So don't freak out if you see a different template that has a different format. Just understand it's recording money that's going in and recording money that's going out. Any thoughts or questions before we jump into the new material today? I think somebody has joined us, but any questions before we get started?
Nope.
No,
From me.
Okay. Great, wonderful. All right, so profit and loss statement, also referred to as an income statement. Here's where you're going to be documenting most importantly, sales revenue, cost of goods, gross profit, operating expenses, and net profit. People talk a lot about, oh, I made so much in sales. That means nothing, absolutely nothing. Your goal in running your business is profit, okay? And so as you are starting and growing your business, there's what is called the business life cycle. I just wanted to introduce this concept. And just know it does not happen as smoothly as this. You don't have this takeoff effect. But in the beginning, when you're starting a business, most businesses, you're going to have low sales and high costs. So you're going to have very little profit, if any. That might vary depending on the type of business you're in, but generally that's the introductory stage. So most of you are probably in this phase. And then you want to get to a growth stage where you have increasing sales. And because you're increasing sales and being efficient, you're reducing cost. And as a result, you're generating profits. Over time, as the business grows and matures, you want to have consistent sales or ever increasing sales. You want to always be able to reduce your costs so you have increasing profits. Now, unfortunately, if you're not paying attention to your business, whether it be the external forces or just being short-sighted in your internal environment, there are businesses that go through the decline stage, meaning you have reducing sales, but the costs keep constant or rising. And as a result, they have reduced in profits. But you can extend the life cycle of your business by just reinventing yourself, revising your products and services, new target markets. So just know that the business goes through a growing stage just like anything else. And I don't know how many of you watch the business news, but there are many companies that are very well known that they grew really quickly over the pandemic and now finding themselves trying to fight a decline in their business. So I think the example that's maybe the classic example right now is Peloton. They were one of the COVID pandemic stars, and now they're seeing a reduction in their sales, and they have these costs, and they're trying to see how they reinvent themselves. So you can be doing well today, but you have to keep focused on it. So you are always trying to hit this curve. But and just like in life, it's not always just keep going up. You will have some variations. That's part of it. But you want to realize you want to get to a growth stage. Okay. All right. So just like last time, I'm providing you an income statement template. One of the Congress Type team should be dropping it in the chat. It's just one of very many different template styles that you can use. And we're going to go through each section right now. And I have a couple of examples for you to help make it easier to understand. So the profit and loss statement, also some people might just call it a P&L. It's going to contain some major areas of reporting. In general, this tends to be the terminology that's used in profit and loss statements. Every once in a while, you'll see some variations in the term. Don't freak out, okay? Don't freak out. But generally, they're going to be around the same term. So it's going to record revenue. It's going to record net sales, cost of goods, gross profit, expenses, total expenses, net operating income, and net income. A lot of those terms sound alike because you're going to do some calculations in this, much more so than the cash flow statement. The cash flow statement was really adding up all the money that went in, adding up all the money that goes out, and then subtracting the two. This one has a little bit more variation. So let's break this down. Let's start with the top end of the income statement. So the first part of the income statement is going to be the revenue section. Okay, so here you're recording all the money that's coming into the business from sales. Unlike the cash flow statement that reports all money coming into the business, no matter the source. So the cash flow statement has sales, has the loan amount, has your own contribution, your friends and family, all of that is in the cash flow statement. The income statement is only recording money coming in from sales, okay? And so once you might have different revenue streams from different product categories. And so that's going to be added up. They call your gross sales. Now, in this particular version, they included right here called less sales returns and allowances. So in this version, they allow you to record the deductions you might need to take from your total sales because you might have had customers who requested a return or refund. You might have discounted some of your product to certain customers. So that would be captured here. Now, don't worry. If you're using an accounting software and it's set up properly, it is going to automatically account for these things and place it in the right place on your statement. But you add up all of your revenue and any returns or allowances you have, and then we are left with what's called net sales, okay? Now, this is the second part of this is probably one of the most important parts of the income statement. It's called cost of goods. Some people say COGS, so that's usually just the acronym that's used for it. So your cost of goods are expenses of the business, but it's those expenses related to making the product. Meaning, if you're not making product and selling product, you would not have that expense. For example, if you were like a basket maker and you were making the baskets literally from hand from some organic raw material, the inventory of that raw material will be a cost of goods because you would not buy that material if you were not selling that product. So here you're in your business, you have to know your production process because your production process is going to identify all the expenses that goes into making that product. So you have to be very, very diligent on the production process. So whatever type of business you're in, everybody's going to have some sort of cost of goods. And so those expenses will be identified here, whatever they might be. Many of you are selling actual products. It's going to be like inventory. It may be shipping. it may be the packaging or some other items like that. And so those expenses are going to be added up, and that's going to give you the cost of goods sold. The reason why this is important is because you're going to subtract the cost of goods from net sales. When you subtract those two, you get what's called gross profit. So you're taking the total of your sales and you're subtracting the expenses that are directly related to the sales. And that's give you what's called gross profit. Okay, so if I sold 1,000 handmade bags or baskets, right? If I sold 1,000 baskets, let's say I sold them for $10 each, and so I made $10,000. But let's say it took, I had for every $10 bag I made, I spent $5 in just materials and time and labor to put them together. So that would be for every $10 I spent $5. Then so my gross profit would only be $5 for each bag. That's a very critical piece of information. You must know your gross profit, because if you're selling product or services, but most of the money you're collecting is going directly into making the product and services, you're not going to make any money. And so that's when we say when you have a high profit margin, that means you're making the product alone is just eating up all the money that's coming in. Because right now, which is this part of the income statement, we haven't even gotten to the rest of the expenses of the business. We've only just covered the expenses that are related to the actual product. Okay, so that's why you have to be if you don't get anything else about business and accounting, is understanding this part here. Okay, any questions? Any thoughts just before I go on? Raise your hand if you're good, or if you have a reaction, or come on screen and let me know. Gotcha. All right. So we got our revenue, we got our cost of goods. Next part of the income statement are the rest of the expenses of the business for whatever that time period is. And you can see it looks very similar to the cash flow statement. All right, so you have all the advertising, the bank charges, if you made some charitable contributions, you had employee costs, you have some office expenses, you have supplies, telephone. The reason why they're listed under the expenses and not the cost of goods is because these are things you would pay for regardless if you made any sales. Okay, so the expenses that will occur no matter if you have sales are going to be listed on the expense category. Where this becomes tricky is that when you're paying employees, you will have some employees that you will only pay and hire because you're making product. Their time and expenses are going to be listed under the cost of goods. For instance, if you are hiring part-time people, and when you get an order, you hire a person to make the product, that person is going to be on the cost of goods. But if you hire somebody full-time and they work, no matter if there's any sales, then they're going to be under expenses. So again, we have to go back to understanding our product production process so we can identify what expenses lie where. And so when you add up all of your expenses, you get the total expenses. Okay. Now, you're gonna subtract the total expenses from the gross profit. Remember what gross profit was? Net sales minus cost of goods. So our gross profit, we're gonna subtract all of the rest of the expenses, and that gives us what's called the net operating income. Okay. The reason why we call it net operating income is it's the income we've generated from sales. But in many of your businesses, this bottom section will not apply to you. Sometimes businesses have other forms of income not related to sales. So for instance, what if the company had invested in another business and they were getting returns on their investment? That would go here. If you had a money market account or a CD, some kind of financial instrument that was appreciating in value and generating income from you, that would be here, because that's not money from sales. So you would add that other income down here at the bottom. And when I add it to the net operating income, that's what we call the net income, okay? But if you don't have any of this other income, then your net operating income is going to be the same as the net income. The goal as an entrepreneur, as the chief business operator for your business, is you want to generate net income, because it's the amount you're going to have left over after you paid all of the cost of goods and after you paid all the expenses. So the next time you hear somebody say, I sold $1 million in product, that means absolutely nothing. Which you're going to say, okay, what was your net income on $1 million in product? And sometimes it is absolutely zero, or it might be negative, okay? Particularly when you're starting out. So let's not be impressed by the sales. What our goal is net income, okay? I got somebody with a question?
Yes, hi, this is Brenda. So I have a question about the gains of or sale of assets and that sort of thing. So something else that I have a rental property. So would that be
Okay.
included in this? Like if I sold one of those properties and had profit from that?
Is that owned by the business?
Yes.
Okay, so it's an asset owned by the business, and is the business in the business of selling property, or is it in the business of renting property?
Well, it is for rental mainly.
Okay, so your rental is where is your sale.
Correct.
Right.
Right.
So the sale of property, and it's almost like a piece of equipment because of the type of your business, then that may be listed here as other income. But you would need to talk to your accountant, because here's the thing. If you're a property company and you do rental and sales, then it might not be other income. It might be what the business does. Does that make sense?
Yes, I think
So
so.
you have to be really clear of the
Yeah.
type of business that you're in. If you're only in the rental space, which most people won't limit yourself to that. They might say I have a property management company or something like that. I don't know.
Mhm.
But if it's a pure rental company, then the actual property is literally like a piece of equipment like anybody else's company. Then it might be under other income. Now, the IRS might view that differently. So please don't confuse.
Yeah.
Did
Yeah,
you
because I know
say,
they have like a 1031 exchange and all that stuff. Yeah. Okay.
yeah. So
Okay.
the IRS views a business differently for their purposes than we do our business for accounting, bookkeeping purposes,
Okay.
right?
Thank
Because they
you.
have their own rules, yes. And so for your business, for sure, I would at least have an accountant on standby. And if you're able to get a tax account, that would be even great, where you have some consultation on a regular basis, and that doesn't have to be every day. But try to budget it in. And many of the accounting softwares that I listed, some of them have where you can talk to a live advisor so that you can get that kind of insight. And so they could set it up properly, not only for your day-to-day accounting, but also for your tax accounting. If that makes sense.
Thank you very much. That was helpful.
Yeah. Yeah. And just know, if all you guys, if you're an LLC, the IRS treats an LLC as a sole proprietor. They don't distinguish between a single member LLC and a sole proprietor. So they have all their little rules. And because it's the IRS, we kind of have to go with it. Okay. But great question there. Anybody else have any questions? Because this is the big thing about the income statement. Is everybody good? Don't make me quiz you.
I'm good.
Okay, so goal is net income. All right, with that being said, I'm here again. I just pulled quick examples off the internet that, we're here to illustrate. Also, it's to illustrate how there could be different variations of an income statement, but let's go through an example. This is for Apple. Not sure if it's actually for Apple. I don't think it is, but be that as it may, that is not of our concern. What we're looking at is the formats and seeing if we're able to make the calculations we just discussed. So in this format, they have revenue. They had one line for net sales, as if they either added up all their product sales together or they only have one product line. Doesn't matter. So that's 229,000. I think this might be in the millions. Then they had the second section is the cost of revenue. So they had one line again for cost of sales, so they didn't break it down, or their accounting system software, there might be a tab where you can get more detailed information as necessary, but it summarizes for the printout. So there's 141. So what are we going to do to get to our gross profit? Who can answer that? Congress Heights, what are your thoughts?
I'm sorry, could you repeat it?
Yeah, so how do you get to your gross profit? If we have our net sales here, and we have cost of sales here, which is the same as cost of goods, and we have a gross profit, well, how do I get to calculate my gross profit?
Subtract the two?
Bingo, that's it. I'm just making sure you guys are here. I know you were like, duh, but you'll be surprised how this tricks people up. Yes, you simply subtract the two, right? So now we go into the expenses. And you can see, based upon what they've listed here, research and development, that sounds like a reasonable expense. Selling and general administrative. So here they're rolled up all of their employee activity all into just one category. And they've added up those total operating expenses here. So let's say it's 26K. And then they came up with the operating income. So the operating income would be what? We're going to subtract the gross profit from the total expenses, gives us our operating income. So this would also be called the net operating income, okay, depending on what template you're using. And then they have an other category. So they have other revenue and expenses, and they say some income and before taxes, blah, blah, blah. So they do have some activity. And by the time you get here is the net income, 48. Let's say this is in the thousands, but I think it's actually reflected in the millions. So let's say this was 48,000, but look where it started. The revenue, we're at 229. Okay. If you are not looking at your profit and loss statement, you will think you're making money because you're generating so much in sales. But when you get down through all the calculations, you can see at the end of the day, it's a fraction of the total sales is actually being kept by the company. Okay. Does somebody have their hand up? No. Okay. And so if you're doing,
I was raising my hand for the previous question, but you were already
okay.
You had already got the answer. Yeah.
Great. And so the other beauty of the profit and loss statement is that if you do that year to year or quarter to quarter, if you do them frequently and you line them up side by side, you're able to view some trends in your sales, also trends in your gross profit, your expenses, and your nets. So you can see here, they sold 229, right, in 2017, but look in 2015, they sold 233. Not much difference, right? But because if you're examining your profit and loss, look at the difference in the net income. Here you made, you spent just, you made a little bit less, but you made 48. But there was not a tremendous change between 29 and 229 and 233, but you generated 53, much bigger difference. And it's because you can see there are some changes in the operating expenses, even though the cost of goods may have remained fairly flat between these 2 years. So this allows you to make decisions on what expenses you may need to manipulate, whether up or down, to increase your profitability of the company. Okay, does that make sense to everybody?
Yes.
Okay, cool. All right. I throw you another example at you. This adds a little twist to it at the end. All right. So you may have seen this if you watch a little bit of Shark Tank. Every once in a while they mention this, or if you watch a lot of the business programs on like CNBC or something like that. There's talk about what's called the EBITDA. Okay, it's an acronym, and it simply means earnings before interest, taxes, depreciation, and amortization. It's a fancy term to mean, how can I compare one company against each other if they have variations in all the other parts of the income statement? Because it allows you to accommodate, to calculate earnings, even if the company has to pay on interest and taxes and all these other stuff that might be coming out of the net income because it's listed as an expense. It's very critical because investors may ask, what is your EBITDA? Because they want to know what's the income before you had to pay all these other requirements. Because then that gives them a sense of how the company's operating. Yes, they know you have to pay your taxes. Yes, they know you had depreciation in equipment, and that's been subtracted from the revenue that came in. But if you can give them an EBITDA, they have a better idea. Oh, can this company generate sales? And as a result, can this company generate money? So I found another income statement example. Again, slightly different format, but we're not alarmed, right? Because we've seen this before. So the top part, again, you have your revenue. This particular template has identifies various revenue streams, and you can do this too. So this has 2 product categories possibly, or 2 divisions. So there's 3.5 million and a 2 million. Total revenue is 5.5 million. They have a cost of sales. They don't use cost of goods, but it's cost of sales, same thing. And they have 2 line items for cost of goods. One is a 1.8, the other is 1.4. Okay. So if I subtract the 5.5 from the 1.8 and 1.4, I left about $3 million, right? So that ends up being a gross profits of a little over $2 million. Okay. So I sold 5 million, but my gross profit was only 2 million. So a lot came off the top. So then I have some expenses, and they just kind of lumped them all together here at about 1 million. And so my operating income comes out to be about 1.2. Now, these are all things the business will have to pay, right? But they've just been pulled out and separated. So there's interest, depreciation. So this means there might be equipment that lost value. There was cost for any loans or debts. And then there were non-operating items that had both income and expenses. And of course, there was earning before taxes. And so all of that gets factored in. And so the earning before taxes and depreciation and amortization was 1.2. So if somebody were to say, well, what's your EBITDA? You would say, oh, is 1.2, and which is much different than saying your net income is 922. Like, this is good. It's still profitable, right? But if I want to get a sense of all the stuff that you had to pay, but was separate from sales and operating, then you would say my EBITDA was 1.2. And that gives me another view of the company versus just looking at what's the sales, what's the revenue, and subtracting the 2. Does that make sense to everybody? This is a higher level calculation, but I wanted to introduce you now while you're in the early stages of your business, in case any of you are going for investor financing. This is a very critical calculation to know the distinction between the 2, because somebody might invest in you if you're making 1.2, even if your net income is only 900,000. Any questions on that?
So, hi, I'm looking at the difference of the operating income and then the EBITDA. And I'm
Uh-huh.
trying to see what is left out. Is it the non-operating income that's left out of the calculations?
It's about
Like a
10, I'm sorry.
$10,000 difference.
Yeah, yeah. It's probably folded up in, I think it's spread across these right here. If I would have added them all up together, it's a spread between these categories that you lose the 10K. Does that make sense?
It does. I just wanted to make sure that the operating income, that figure is supposed to be different from the EBITDA.
Yes,
Okay.
yes, yeah.
All right.
Some businesses, normally some of these expenses might be located up here. Might, if you're a small business. But in this particular example, they specifically identify them below the operating income, which is fine. And so that's why it's going to be different. And it should be different. The key part is the difference between the net income and the EBITDA. But that's a good way of looking at it. But you're right. Anybody else have a question? We're good on income statement? Any reactions? You're all awfully quiet. This is a big topic. I want to make sure you got it.
Dr.
Okay.
Wall,
Sure.
question. What is
Uh-huh.
the worst thing that could happen if, as business owners, we or the businesses that are joined here don't use any of these documents, income statements, profit and loss statements, all of that? They just collect and spend. What's the worst thing that could happen?
Well, number one, if you ever are going for any kind of financing, whether it's debt or equity or otherwise, you're not going to get the loan or investment because the financial statements is what everybody's going to ask for a pitch presentation and you have the financial statements, they're going to have these statements in front of them or they might simply ask you, what's your gross profit? What's your net income? What's your EBITDA? So if you don't know that, then it makes you seem like you don't know your business. So it's not just being able to produce the documents, but being able to explain the documents. Second to that, if you do not use the accounting tools and you just kind of, spend money, sell, get money, whatever the case may be, you're probably not going to earn the type of money you would like. And you're probably going to think you're making more money than you like. Because the key to business is looking back at the data and making decisions to improve the business. Because like I said, I've met a lot of people who says, oh yeah, I have sold $1 million of business. That means absolutely nothing. It means they could be as broke could be because they're not accommodating for all of these expenses and the category of expenses. Does that answer your question?
Yes, it does. Thank you.
Okay. And just know if you start to default on your payments, it's gonna hit your credit profile as well as the business's credit profile. So then it makes even more difficulty to want to get any kind of financing for the business, or sometimes vendor agreements. Some vendors will request a credit profile before they approve you to be a supplier for your business. So it has a lot of impact. But I know many small businesses don't do this. So we're going to change that. Any other questions? Okay. Oh, that's a hand clap.
Oh,
Okay.
I don't know. I was trying to raise my hand, sorry.
Okay, go ahead.
So I guess, can you kind of summarize, like I'm trying to take this all in, but I'm also trying to take notes on it. But can you summarize the difference between the EBITDA and the net income, and like to make sure I'm, I add all of the things up that are supposed to go under the net versus the.
Right.
Yeah.
Right. So the net income here, I'm adding all of these items back into the total. That's what's happening.
Got it.
Because I want to know how much did the business make before you paid your taxes, before you paid the loan interest. Because that also tells me that you're actually paying your taxes and you're actually paying your loan interest or other types of requirements that the business may have. If somebody says, I don't know what that is, and I'll be like, maybe you're not actually paying those items, right? So these are just accounting principles that typically you may not learn or even encounter until you grow to a certain size of business, because mostly it's corporations that talk about this. But I'd rather you have an intro to it now, so you start thinking about, do I want to grow a business where I'm going to get an investor? Do I want to grow a business where I want to go for bank financing because I want to earn, $5 million a year or whatever the case may be? So I don't want you to think small. So I want to introduce concept, and you might not get it right away. Remind you, and there are graduate programs that are teaching this stuff. And so I want to introduce it to you now. So as your company grows or as your goals grow, you will understand what do you need to put into your business in terms of setting it up from an accounting perspective, okay? Rather than trying to do it later and then having no idea about it, or somebody asking you something and you're like, I don't know what that is. And then you're good business, but because you couldn't answer the question, they might walk away from your business. I would hate for that to happen. Does that make sense to everybody? We good? I'm gonna take silence as yes. Okay, so income statement starts off about the revenue, the sales, subtract the cost of goods, you outline your operating expenses, you subtract your operating expenses from the gross profit, that ends up with your net profit, net income. We all know that you might have additional expenses and income, which might be part of the EBITDA. So we know that the EBITDA might be a slightly different calculation. We got all that. Now, if you don't know anything else about an income statement, you must know your gross profit margin and your net profit margin. And if you understand gross profit and net profit that we just talked about, then these calculations are just going to be a breeze, because it's a bit of a shorthand to explain to somebody else how your business is doing. So literally, if I don't see your statement and I literally just ask you for your gross profit margin or your net profit margin, I know I can make a decision on your business without saying anything else, okay? So again, this is a question that comes up a lot on Shark Tank or any of those investor shows that you've seen. And so there are a lot of key financial ratios that you're going to pull away from your financial statements. I'm just going to go over 2 for the income statement. But by the time we end this boot camp, you will have a list of about 6 to 10 that you will be able to embed into your business now. And again, let me remind you, many of the software programs will automatically do this for you as long as it's set up properly, okay? So profitability ratios gauge the degree in which the business activity makes money. Remember, that is your goal. Yes, I know for many of you, money is not the driver of why you started the business, but your goal is net income, because that's how the business stays alive. So gross profit margin, okay? We're going to take the same principle. We're just going to convert it into a ratio or a percentage. So here you're taking the net sales, the net income, subtract the cost of goods, the net sales, all the revenue from sales, you're subtracting the cost of goods, and then you're dividing it by the net sales. What it's giving you is telling you the percentage of sales that's going towards the cost of goods. When we did it on the income statement and we did the calculation, we're coming up with actually a dollar figure. This calculation is giving us a percentage. So here we can say, oh, my gross profit margin is 50%. That is just saying that my cost of goods are 50% of my net sales. That's what's happening. By the time I collect my money and pay the cost of goods, I'm left with 50%. That alone is rich information that you could tell somebody just like that, and they have never seen your financial statement. But we know it's only the gross profit. That is not our goal. Remember, 2 slides ago, I said the goal is the net income. So it is the net profit margin is what you're actually going for, but you got to know one to get to the other. So we're going to, so the net income is net income divided by the revenue times 100. In this equation, they didn't put the times 100, so it doesn't matter. This is going to be a decimal point number. This is going to be a percentage number. Same thing, okay? So net income, and what was net income? You guys remember? Quick quiz, what's net income?
Total sales minus expenses or something like that? No?
So it's the gross profit minus the expenses, right? It's what is left over at the complete end, the net, right? And I'm dividing it by all the revenue. So I'm taking the bottom number with the top number. And by the time I divide the net income to the revenue, I subtract, I multiply, I get a percentage. I'm saying the net income is a percentage of my total revenue. Okay. So if I sold $6 million of product and my net income was $1 million, what's my net profit margin?
Did you say 6 and 1?
Yep.
5.
Who's got the calculator out? Right? Who's got the calculator? My net is 1 and my revenue is 6. What am I left? What's the calculation there? Nobody's got the calculator? I'll do it. $16.6%. So that means all that money that was generated, the percentage of the company actually keeps is 16%. So what do you say to somebody if they say, oh yeah, I sold $6 million, and you say, well, what's your net profit margin? And they say 16%, what would you say to them? How would you feel about that number?
Not good.
Thank you. You don't even know what business it's in. You just know you should have more left over than that, right? That's the kind of information you can get from using key financial ratios just like that. And so what happens is you're going to set up your accounting system where you're reviewing these ratios on a regular basis, even though you might not go into in-depth review of your financial statements all the time, okay? So let's go into a quick example. Back to our example of the profit and loss statement. So gross profit margin, net sales minus cost of goods divided by the net sales. So I put the hours in dark blue to say these are the values that are involved in the calculation. So it's net sales minus cost of goods, and then you're dividing it among itself. So you're trying to say what's the gross profit? What am I left over with? What percentage out of the sales am I left with as a gross profit? The net profit margin, you're going to use the bottom number and the top number, okay? So it's the net income divided by the total revenue times 100, and that gives me a percentage of what am I left over with out of all that came into the business. Those are 2 things you must know about your business, and you will need to know them on a regular basis. So if you run your reports at least monthly, and you track just the ratios, you will know how well your business is going. The other thing is that, and I have some reference materials we're going to send to you about it. The other thing is that there are calculations on every industry and industry type, business type. There are standard ratios that are accepted for your business type. And it's a very expensive book, but I have a copy. You can always email me and ask me, what is the ratio I should be at for my business? All those calculations are done for you because there are a lot of companies who do that research. What happens is that when you go for a loan or you go for an investor, they access that information. So when you tell them the ratio, they're looking to compare you against the industry standard. So you got to know this. So sometimes we may not qualify for a loan or capital because we didn't know that there was a certain standard ratio for my industry. You might have thought you were doing very well, right? But they're comparing you to everybody else in that industry that is at that size and that stage of the business. Remember the business life cycle? So you got to be plugged in to these larger data sources that may be working against you. But if you understand this now, this also can help you set goals in terms of how you're going to grow, when you might need funding, how much funding you would need, and who you would go to for funding, because you understand what they're going to look at to judge your business. I hate to say they judge your business, but that's, because they're making the decision of how they will earn money. So just keep that in mind. So income statement, we're going to definitely know how we calculate our gross profit and our net profit. And we're going to understand how we calculate our ratios, because it's those ratios that are going to be used, how they're going to judge your company against others. Does that make sense to everybody? Yeah, real quiet. Okay, Miss DC, okay. Miss Dominique, how you feeling? Okay, Black Bella DC.
Yep. It makes sense. I'm with you. I'm following you.
Okay, good. Now, don't freak out if it all doesn't sink in at one time. Don't freak out. This is all new information. But if you get it early in your business, man, I cannot tell you how this is going to unlock so many strategic decisions you can make about your business. Okay. All right. So any thoughts or questions? I narrowed it down this week because that's a big, heavy topic with the income statement. Yes. Miss Dominique?
Yeah, what's the name of the YouTube page where you guys said that we can go back and review the like today's lesson and last week's lesson? Because I was looking for the YouTube page so that I can kind of like just go back over, because it is a lot of information, and it's not something you can get right away.
Miss Monica Baldwin, you can let her know.
That's
I was
Destination
grabbing the
Congress.
link now.
Oops, I didn't hear that.
Baldwin, I think you got cut off there.
Yeah, I just stopped because Ms. Jones is going to drop the link in the chat, but it's Destination Congress Heights. That's the name of the YouTube page. And you'll be able to pull up all the videos for this boot camp and even the previous ones that we have done on marketing and customer, or, even getting started and stuff like that.
Okay. So let me tell you a quick thing you could do tonight. When you download the template, and it should be programmed that it will automatically add up your as you input information. Start to play around of some numbers you would like to obtain, goals, sales goals you want, and just see how the calculations change as you put in more and more information. So don't think you only use an income statement when you're in business. You could also use it for your planning. So if you want to start just getting used to it, I would download the statement and start putting in numbers and seeing how the calculations work out, okay? That would be the one advice I think you should do this weekend, because that will reinforce in your brain the not only the purpose of the income statement, but how to use it. So it becomes less and less intimidating, and it becomes just a natural way how you do things. You can also use it personally for your own budgeting. So if you use your cash flow statement as a budget, you can use your income statement to see, okay, how much have I earned right now? Do I actually have left over? So you can treat yourself as your own business that way. And I actually did that before I started going into business for myself. So, any other questions?
I have another question. You had mentioned a book that you said, I think you said if we email you, we could get a copy or something like that.
I'm not sure, but I do have 2 slides on free resources. And those are the ones I use on a regular basis. They have links directly, or you could just Google the name and you can download materials from those sites. They're all free.
Thank you.
I would particularly get the OpenStax accounting textbook for sure.
OpenStax, STACKS.
Yeah, OpenStax, OPENSTAX, yes. And go to subjects. They have a lot of subjects, and then you scroll down, you got to go towards the end, you'll start to see the entrepreneurship and accounting section. Ms. Dominique, you have a question?
Yes, I wanted to know that when you add the template for today, can you also add the template from last week? Because I didn't catch that last week.
Okay. Ms. Monica, could you post both templates to the chat?
Sure.
And if you have Microsoft as your, I know a lot of people use Google or Zoho. If you have Microsoft, the templates I usually pull really quickly are on there as well. So, and they have different versions. So if you want to pull more than one, you can. But Monica will post the others in the chat. These are just my favorites. I've been using them for years. All right. Anybody else have any other questions, thoughts? Are we good?
It was the cash flow statement, is that correct?
Yes. Cash flow statement and
Okay.
income statement. Correct. Yeah.
Yep, done.
Yeah. This was a big topic, so I didn't want to add a whole lot to it. The income statement, in my opinion, is one of the most important financial statements. There's only 3 of them. The cash flow statement is the easiest one to start using. The income statement, because it's around profit, it's the most important one you need to know to understand, is my company making money? In the next section, we'll talk about the balance sheet, and that's when we get into net worth, assets and liabilities. So that is really helpful when you want to talk about how much is the business worth, which is totally different from how much does it generate in revenue and sales, and how much does it generate as a net income? Because you can be profitable and not worth anything. So keep that in mind. So there's other financial parts of the business we need to manage. So that'll be on Tuesday, will be the balance sheet. And of course, you'll get all your templates and some link to other information that might be helpful. But feel free if you have any other questions. I'm ending a little bit early than norm, but I wanted to leave enough time for this big topic. Monica Baldwin, anybody else need to add anything?
Nope. Finances are always exciting to me, so I hope, and it's always one of the struggles that everyone has. So I hope everyone gathered or obtained a whole bunch of, absorbed a whole bunch of good information from Dr. Walker.
Yeah, accounting is the language of business. And it'll trip you up. Simply because you're not speaking the same language that everybody else is in business is speaking. Because, you know, we like to talk about our product and how it makes us feel, but we got to get really, really comfortable with the financial aspect of it. But it can be done. It can be done. Do not worry. You got this. And you're starting early, so that you're ahead of the game.
True, very true. Thanks, everyone, and we will see you guys on Tuesday. As always, don't forget that this link and the meeting ID and the passcode are going to be the same